let's take a look at the bigger picture. Tony Drake is with us, CFP, Drake and Associates. I want to start with the CPI data today. So, obviously we see inflation at this level where it's the slowest pace in 2 years and well off that 9.1% level of June of 2022. That's long forgotten. Does the Fed still need to raise rates?
That's the question we're all thinking today after that pretty good report today, right? I mean, and as you stated, 600 basis point reduction. But if you think about that time period, Nicole, rates have actually gone up during that time period. I think they're going to remain sticky and high. And I want to kind of warn people to be careful. If you think about, you guys were just talking about one of the big six technology names, high flying, lots of buy ratings. But we turned a 40-year cycle in bonds and rates. So I think just this move that we've seen in the last 6 months to jump into these, technology growth names may come back to bite us at some point, because I don't think we're going to get away from these high rates in a very quick fashion, regardless of what's happening with inflation. But I think we're obviously not going to affect the July meeting. I think that's baked in. They've told us they want to do a rate increase. They have to stick to that. Maybe they start to think about it in September. I think we likely get a pause in September, and probably a year later they're going to regret this rate raise in July here. But it just trickles through the economy so slowly. But we're continuing to see some good signs. Some of those things start to pull back on the inflation front. Maybe this is the soft landing that we've been hoping for.
And it's interesting because in the Fed's Beige Book, they did note about economic activity picking up slightly in May and late May and June, but that they do expect slower growth going forward. That being said, if they do the 1 or 2 rate hikes, as they're indicating to us, do you perceive that we could have a recession? How deep will it be? How long will it be? Will it be this year or next year?
Yeah, I think the reality of this maybe kind of soft landing is starting to become more and more clear. You think about unemployment slowing, but it hasn't crashed. And we have nice, steady decreases in inflation. Inflation's already in a range that's a lot better for middle of America families. You look at food in particular, that's really moved in the right direction. If the Feds want an immediate reaction, they're going to have to go at least another 75 basis points. I want to state on the record, I think that would be a huge mistake. But, if they're looking to really get an immediate move, that's really what they're still going to have to do. There's some room to move there, but that could potentially push us into this longer-term recessionary period, and it's looking like that may not be necessary right now. The only big red flag to me, Nicole, is commercial real estate. I think that's going to have a hard landing no matter what you do. I think it's going to take a lot of years and time to really see the full effects in commercial real estate.
So if you think about commercial real estate, maybe you're not investing in REITs. What about banks that have exposure? Some of the regional banks have exposure to commercial real estate, right?
Yeah, they sure do. And I think that's part of what we're going to see as this all unfolds in that sector, is what happens to not just the commercial real estate REITs themselves, but all the different industries that are involved with that. A lot of those foreclosures, a lot of that struggle hasn't happened due to some of the support programs. But, we're seeing these vacancies everywhere. And, for these regional banks that are holding that paper, that's certainly going to have an effect on those. And they've already been beaten up so much in the last couple months.
Right, understood. Tell me about some of the sectors you do like. For example, within tech, tell me a little bit about Apple. Is that a name that interests you, that you're watching, or that you actually say that you should put some money down?
Yeah, I think, Apple's interesting. Technology's been up about 38% if you look at the big six, really driven by these large six companies. And historically, Apple does really well this time of year, but it does tend to take a break after September when we're in these iPhone cycles, new phones coming out. I think if you look at the barbells of technology, there's still some companies out there that have reasonable valuations, but they're in still pretty high growth names. Dell's looking really attractive at their valuation. HP Enterprises is looking good. So I think there's still some opportunity out there. But again, I want to warn people to be careful in technology. There's been this move to go back to the same old. But remember, this is a 40-year cycle that we've turned in rates. So you really have to be careful, because I think these rates, even if we see inflation come down, they're going to be sticky and high for a while. And that doesn't lend well to growth in the long term.
Well, here's the thing. I know you said 75 basis points would be a mistake, but the Fed noting in the Beige Book report that prices increased at a modest pace. So they are seeing that inflation has come down some, but the worries they have is if they don't continue to raise rates, that inflation will once again pop higher.
Yeah, and I think that's the big concern. One of the things on the inflation front that we really have to watch is wage inflation. Right, we have a lot of threats to it's simple supply and demand. Right, a lot of big organizations on the verge of going on strike. You know, you think about all the manufacturing in the United States. You know, if somebody's lost a job that worked at Big Lots, you know, it's hard for them to go into a manufacturing factory and making AI chips next week, even though there's been a lot of building and infrastructure happening there, and a lot of these manufacturers are starting to build here in the United States. There's a big gap there, and I think that's really going to drive to wage inflation. So I'm not suggesting we're in the clear here, Nicole. I just think we have to be careful. We're right on this verge of a softer landing. The right things are lining up to potentially make that happen. And I think the Feds need to be careful. A lot of these changes that they make are so slow to trickle through the economy. And there's been such this focus just on what the Feds are doing. And I think we have to be careful to think a little bit about supply and demand. Right? Demand is still favoring services a little less sensitive to inflation, but we really have to watch that. I think we want to think a little bit about the focus on supply so we don't erode the demand.
And we'll watch those names, Apple, Dell, and HPE. Tony Drake, thank you. Nice to see you. Drake and Associates, thank you.
Thank you.